Welcome, everyone, to tonight's Hookup with Real Estate Masterclass. We're super excited by our guest, Andrea Casson Galiano, and I will be introducing her in just a minute. But first, let us go through some housekeeping. All right, Ken, would you mind reading the disclaimer?
Surely. We appreciate you attending the Hookup with Real Estate Masterclass. We are not financial advisors. The content we provide is strictly for educational purposes and not intended as legal, financial, or investment advice, nor is it a solicitation for funds. Remember, participation in this program is at your own discretion. Real estate markets are subject to change and can be dynamic. Hookup with Real Estate and its representatives are not liable for any outcomes resulting from the information provided or engagements with third-party providers. Seek professional advice before making any real estate or investment decisions. By attending, you consent to this event being recorded and understand that internet security is not absolute.
Thank you. Okay, so we are Hookup with Real Estate. I'm Donna, that's Ken. And our mission is to empower aspiring and early real estate investors with exceptional education, invaluable skills training, and genuine opportunities to invest in real estate while simultaneously sharing strategies that guide you towards success in real estate and away from costly mistakes like those we made early on, which are documented in the book, Real Women in Real Estate. So it's available on Amazon, or if you'd like a soft copy, I can send you a signed one. Also want to mention that Ken is a licensed realtor in New Jersey, a veteran and a tile contractor. If you are looking for referrals or any business in this area, his website is at kenneth-hook.weichert.com. We are powered by Legends, and this is a property that Andrea, Olu, and I are GPs on, and they do have some skills training available on their real estate community. So you can check that out at school.com/real estate club. All right, another investment that we focus on is core tax deeds, and you can find out more. This is a very affordable way to start investing in real estate, and I can connect you with the founder where you can check it out at www.invest.coretaxdeeds.com. Okay, so here we are in July, the end of July. It was just a couple more before the end of the year. It's hard to believe we're already here, but just note that we're normally on the fourth Wednesday, except for November and December, to avoid conflict with the holidays. So, okay, now there are a couple of ways to connect with us. The first way is through our YouTube channel. You can like and subscribe, and you can join our Facebook groups as well. All right, and if you're interested in taking the next steps, then you can get real guidance, real strategies, and real investment opportunities. You can book a free call with us. All right, Ken, please read the quote of the day.
Leadership is the ability to translate vision into reality. Warren Venus.
But okay. All right, now we get to the good stuff. I am going to introduce Andrea. Okay, so Andrea Casson Galiano is the managing director of Brasstown Capital, a real estate investment firm focused on self-storage, parking, and industrial flex in the Southeast region. She brings extensive experience in building productive relationships, innovative problem solving, and focused customer satisfaction. Andrea has managed Brasstown Capital for 4 years and built a portfolio of over 2,300 units and over 20 million assets under management, such as 1,440 multifamily units and 970 units of storage and parking. And something really interesting about Andrea is she's also invested in a yacht charter short-term rentals in the British Virgin Isles. Let's see. Okay, so her largest acquisition is a 650 unit self-storage property, which she is the lead sponsor. She co-hosts 2 commercial real estate groups with a monthly networking event in Atlanta and a weekly online networking event. So, Andrea, if you have any links for either of those, feel free to put them in the chat. Andrea also has extensive experience in corporate America. She spent 25 years with AT&T doing a variety of roles as program management, capital deployment, technology, business, and product development. She's done some really interesting things by leading construction for mobility in the Southeast region at very high-profile venues such as football stadiums, airports, and university campuses. And she's managed wireless programs and deployments for 3 back-to-back Super Bowls, managing the vendor and ensuring internal cost savings and performance goals were achieved. She's a Boston native, attended Emory University, where she received her Bachelor's of Business Administration and a Master's of Business Administration. She's very involved in their alumni board, working closely with the university president and his cabinet. And she was elected to be the Emory University ambassador and a member of the University Senate. She's also a strong believer in mentoring and has participated in numerous mentoring programs and informally mentored dozens of individuals. As someone that believes in giving back to the community, Andrea has also volunteered for dozens of organizations, mostly in a leadership position. She lives in beautiful North Georgia Blue Ridge Mountains with her husband, and they share a passion for sailing, scuba diving, and Formula One motorsport. Today, Andrea will be your guide to self-storage, sharing the pros and cons and many other tips. Please help me welcome Andrea.
Thank you, Donna.
Sharing.
I appreciate that very warm welcome, and it's so good to be here with everyone today.
So tell us, Andrea, I know you're going to share a presentation, but start first with how did you get into real estate?
I retired from AT&T and was looking for something to do, and my husband discovered commercial real estate. And we went to Grant Cardone's very first real estate summit in July of 21. And that's when I started investing as an LP, like so many people do with Grant. And it really fit. I immediately developed an interest in it, a passion for it. And even though AT&T and real estate don't have a lot to do, I eventually discovered my transferable skills, which was the program management, which is very similar to asset management. So it felt good, and there was so much of it to learn.
Awesome.
And I always say learning is living.
Learning is living. Love it. All right. So share with us about self-storage.
Okay. I'm going to go through this very quickly. I won't be able to see the chat. If you have a question, go ahead and put in the chat. And Donna, if you want to stop me, don't hesitate.
Okay.
Fun part about storage is no tenants, no trash, and no toilets. But what that really means is no residents. We have tenants, but not residents. And that's the biggest differentiator from multifamily. The next biggest is there aren't any amenities, no dog park or pool or anything like that. So it makes it much simpler to operate. And it's not an eviction process. So it doesn't matter if you're in a red or a blue state or the county that you're in. There are self-storage eviction laws in every state, but they're usually very lenient. So it's not something you have to worry about. Those are the biggest three differences. The rest are a little more minor. I often get asked, how's the underwriting different? And it's really very similar. You use a lot of the same metrics that you do for multifamily and most asset classes. But the things that you will see that are different is we have much higher credit card fees because usually anywhere from 50 to 80% of the customers are on auto pay. The debt is different, and I'm going to go into that later. The interest rates are higher. You don't have to do the same calculation for reserves and repairs because there aren't that many things to fix, and there's generally a lower occupancy. We don't have a good tool.
There is, finish. There's
Go ahead.
one question when you're done there.
Go ahead.
The question is lenient for who? You said it was more lenient. Sorry.
Is it pro landlord or pro tenant?
It depends on the state. I'm not sure what you're referencing that I said.
You said it's the eviction laws are fairly lenient. So do they lean towards
Okay. Yeah, meaning you don't have to do much. Generally, in most states, you have to put an ad in the newspaper, which I know is so archaic. And you give the customer anywhere from 30 to 90 days to respond to your requests for payment. And then you file the ad in the paper anywhere from 10 days to 2 weeks. Some states make you post 2, and then you just auction off their stuff. And by then you've already locked their unit.
storage wars ever show up at your door? I'm smiling.
We have not invited them in, but I'm beginning to think that might not be a bad idea. Give us some media.
Some publicity, right? Yeah.
Yeah.
All right. Thank you.
The classes of storage are very similar to what you see in multifamily. But why is self-storage interesting as an asset class? And sadly, it does well, whether there are good things going on in your life or bad things going on in your life. Death, divorce, and downsizing are the biggest drivers of self-storage. A new trend has been basement, babies, bedrooms, and budget. And so in Florida or other states where there are no basements, people are having babies everywhere. If they don't have enough bedrooms or they can't afford to buy a home, it becomes very, very popular. The other piece that makes it so attractive is it's much easier to raise the rents. First of all, you don't have typically contracts, so you're month to month, so you can raise them just about at any time. But more importantly, rent is most people's largest expense. Storage is usually less than their cell phone bill. And so it really is considered discretionary income, and they don't often even notice the rent increases. And finally, most people don't want to move their stuff just for a $10 or $20 increase. I've gone over the evictions already, so we'll just keep going. On my slide earlier, it said that there's the value-added services, not amenities. And so how do you drive growth in storage? Well, we can do dynamic pricing. I mean, we can change the pricing every day. And yes, multifamily could theoretically change their pricing every day, but with the amount of marketing they do, it's much more difficult. Our advertising includes our price, so it's absolutely instant. And we have people moving in every day. We don't have those year-long leases. So it's much easier to drive revenue growth, but the revenue growth is much smaller, right? The average rent is something like $1,000 and the average storage revenue is about $125. So it's a tenth of what you get. You hear a lot about technology in self-storage, and technology is very important. Online booking is very, very helpful. And you give people unique gate codes so that they can always get in. There's been a trend lately of remote operated locks so that people can move in unattended, and that's how you lock them out if they're not paying. These locks don't work perfectly, so you really still always need a human that's checking on the property. You can't operate 100% automatically. Now, it can be someone that just goes there once a week to check the locks, or however often you want. You offer retail, and insurance is another value add. The tenant insurance is a good bit of profit, so that's a very appealing one. You can improve the curb appeal of the front of your store with landscaping or whatever you like. And that is important to a lot of people, that it looks nice when they drive up. Now, your landscapers don't care, but your apartment dwellers do. There's not many variety of storage. Obviously, you have drive up and climate controlled. You've probably heard of that. You probably have had those yourself. There are new specialty ones that are coming out. It's called cold storage. They use it for wine and also technology. And vehicle storage has been around for a long time. But now you have specialty storage garages for things like sports cars and recreational vehicles. And you have properties that do nothing but that. So we often joke, what do people store and why don't they just throw it out? And they probably should throw it out, but they don't. And so here are in priority order the most common things that people store. And we were talking earlier, believe it or not, people do put expensive things like art in a storage unit. It seems strange, but we do see that. So there's a lot of small businesses that use self-storage. Self-storage is sort of in between them storing it at their home and going to an industrial, flex, or light warehouse, which Donna is very familiar with. So it's a very affordable price point for a small business. And so what kind of small businesses use storage? As I mentioned, landscapers are huge. Any kind of general contractors where they have equipment that, particularly if it doesn't need to be climate controlled, which is so many of them. Seasonal businesses that, maybe it's a Halloween thing, so you only need storage for part of the year. Some businesses shut down. During COVID, a lot of small businesses shut down and had to find a place to store their stuff until they picked up again. And it's very popular for e-commerce. Small businesses don't want to store this stuff in their home, and a storage locker is very convenient and affordable. So I've said what I really like about self-storage. What don't I like? The lower revenue base. I mentioned that earlier. It doesn't scale the way multifamily does. What you see is what you get. The tenants are more transient. Moving used to be the number one driver for self-storage. With interest rates where they've been, it is no longer the largest driver. But from moving, you often get short-term renters. Now, I don't go after short-term renters because that's not who I want. I want people with junk and fairly heirlooms who are going to keep it there forever. A competition can pop up. You can build a storage facility in a matter of weeks if you go really quickly. Even still, it takes less than a year. So you can have no competition, and then all of a sudden they appear. Other than the specialty ones, such as the wine storage, all self-storage is the same. Climate controlled is the big differentiator. And most people are building climate control these days, so it's not really a huge differentiator. And the property is dirty. Even in the climate controlled, there's the doors are being opened so often, we have to clean the inside because it just does get dirty, and the outside is dirty. You've got leaves and things like that. So it's not as clean and pristine as a multifamily. So we talked about movers driving self-storage. Remote work in COVID was a huge driver, and it actually is what made self-storage famous, because as people were able to work from home or had to work from home, they often cleared out a bedroom or a space to make room for a home office. And so that drove self-storage like nothing else has in its existing. And you're still seeing a lot of that growth coming from that. Apartments have become smaller over time, and there just isn't a ton of storage in apartments. And the biggest one right now, the very biggest driver, I was just reading some industry research today, is people who can't move. Either they're stuck in their house because of a low rate, or they're stuck in an apartment because they can't afford a new house with housing prices going up and the high interest rates. And my favorite one is Amazon. Americans are addicted to Amazon, and they just keep ordering more stuff. And we're hoarders. We don't like to get rid of it. So we take the old stuff and we put it in self-storage. Thank goodness for that. Okay, this is an area I mentioned debt was very different for self-storage than multifamily. If you've worked in multifamily, you hear, oh, agency debt, you got to get agency debt. It's the greatest thing. It's not really the greatest thing anymore. It used to be, but it's not. But regardless, Fannie Mae and Freddie Mac, who are the agency debt, they focus on housing. They won't even give financing to short-term rentals, as Olu, Donna, and I learned with our multifamily in Vegas. So they definitely don't do self-storage, even though we have found someone living in one of our storage units. So we joke that we're housing, but we're not. The other big difference is you hear a lot in multifamily, oh, you got to find the off-market deal. Well, the biggest brokers that I've listed here in self-storage, and you recognize some of those names, from multifamily. Argus is the only one who's uniquely self-storage. They don't do off-market. If you make friends with a broker there, they'll say, hey, I've got something coming on the market next week. You know, they'll give you a week or two advance notice, and then boom, it's on their website. I don't really call that off-market. I call it a heads up. So you get to know the big brokers.
Yeah, we do have another question, Andrea.
Oh, I'm sorry. Go ahead.
No, don't apologize.
All right. So
go ahead, Stefan.
all right. So you said that the specialty, the climate controlled units, what does that add to the cost of operating either a unit or a building if they're all climate controlled?
Yeah, you would have a building that is climate controlled, and it would have its own dedicated HVAC unit. And HVAC costs, like everything else, has gone up. So those units can be between $10,000 and $20,000. It depends how big the building is. Typically in storage, you'll put about 50 or 100 units in a building. You do have a lot of buildings, so you end up with a lot of roofs and HVACs. They don't just lump it all together in one big building. With an exception, CubeSmart has come into the market with multi-level storage. And in that case, they do have one building they probably had several chillers for that. And chillers are very expensive. I mean, those are 50 or 100 grand. So it depends how big you build your unit. Our properties in Florida, so our HVACs, are going year round. So what does it add to the price of the unit? Well, that's a great question. Believe it or not, at my property, we had, because the new competitors that opened were climate controlled, and all of our units are on the first floor in a drive up. Our drive up started filling up, and our vacancies were in climate control because people moved out of my unit to go into the fancy CubeSmart that had free coffee and, was all climate controlled. So we actually reduced the price of the climate controlled. So even though they cost more to operate. So the price of the unit absolutely varies. And that gets back to that dynamic pricing of you're changing it all the time based on the competitors and whatever's going on in your particular market.
So do you pass that on to the tenant or
No.
is it just
they pay it's a fixed price? Yeah.
So it doesn't, and if they need it colder than, let's say, it's 32 degrees or 40 degrees and they need a cooler, is there a way to adjust the settings?
No, you wouldn't do that for a tenant. That's when they'd have to go to specialty. So when we say climate controlled, the building has an HVAC. It has air conditioning. It's usually set to like 75 or 78. So it's not, it's fine to store most things, but it's not cool enough to store, well, wine is the big one
Okay, thank you.
that people like. So if you're interested in investing in self-storage, where would you look? By water is the most popular, because you can add in boat parking, but also where you have recreational hobbies, golf carts and snowmobiles. Believe it or not, people put those in a storage unit because they can fit. Campers, obviously, you would have to park in outside. Although, as I mentioned, there are some specialty RV storage areas. And just like with multifamily, you want to look for residential growth, that there are new homes coming into the area, because as I mentioned, moving does drive it. But more importantly, smaller homes where people won't have enough room. And we already talked about basements. Okay, so what kind of debt do you get for self-storage? The most popular one is called CMBS, and don't worry about what that stands for. It's commercial mortgage-backed services, but you don't need to remember that. What makes CMBS so popular is it is non-recourse, and that means the people applying for the loan, for the most part, are not held personally liable. It could get kind of ugly, but that's very, very rare. It's almost always a fixed rate. It gives you higher proceeds than a regional bank or credit union or something smaller. And they generally offer the interest only 5-year period. So that all sounds great. And you can use CMBS for multifamily. I mean, you can use it for any asset class. So why haven't you heard of it, and why isn't it more popular? Well, they have very high insurance requirements, and their escrow holdbacks for reserves and property taxes are very high. They hold back, you can give them the tax bill and you can give them your insurance bill, and they hold back 10% more. And that's just how it is. And you don't have a lot of negotiating power. The rate lock isn't until a week before closing. Now that's becoming popular with a lot of other regional banks and credit unions as well. I think agency is the only one that still gives you a 30-day rate lock. And they can change it at the last minute, and often do. So you get to closing and you have to pay them more money than you were planning to, which cuts into your high proceeds. So it's kind of a vicious cycle.
Now, Andrea, we do have one more question. Chris,
Okay.
do you want to ask your question?
Sure. When you're selecting your site, how do you look at the competition, and are you afraid of saturation? Because I know there's certain markets that seem on every corner nowadays. So, like, if you could go in a little more detail on how you select.
Well, you just led into the next slide. Yeah. Saturation, as you noted, is the number one criteria. Now, if you're looking at a storage facility from one of the brokers, they will have the saturation in the OM. If they don't, they should. I mean, it's almost always in there. However, I saw a deal from one of the big brokers, and they were selling a property in Vero Beach, which is where my property is. And they only had 4 of the 7 properties listed as the comps in the OM. So they gave the proper saturation, but they didn't give the proper comps. And I couldn't believe it. And these were all within 5 miles. Really, most of them were within 3 miles. So it's not like they were too far away. Really disappointing at the ethics there. So, the box in pink, always check the comps yourself. And that's true of every asset class. Go on Google Maps, do a search, go on Yelp, just do a couple searches and they'll start to pop up, and you can see if the broker included all of the comps. The next most important metric is occupancy. Now, I mentioned it's lower than multifamily. I think multifamily is running at like 92% nationwide, whereas self-storage is anywhere from 79 to 82% nationwide. So it has a much lower occupancy. Delinquency is a challenge in storage. It's a challenge in multifamily too, particularly in B and C classes where people have stopped paying their rent. But eventually you evict them from their home when they don't pay their rent in multifamily. If they're delinquent in self-storage, they might lose their holiday decorations. And so they generally don't care as much. So it's harder to enforce payment once someone becomes delinquent. And then the other metrics are very similar to any other asset class. Okay, so you're serious about investing in self-storage. How do you manage it? Was there a question?
You say manage it, meaning the investing, or manage the property? I was curious.
The property.
Okay. Thank you.
So, most properties over a certain size will have an office with an on-site property manager. That size is going to vary, and it's going to depend on the market. Right? Rural markets are going to expect more customer service. Markets in major metro will be less so. So it's very unique to the property, and that's a decision you can make depending on what level of service you want to offer. But you do almost always have a offsite property management, and they do need to do exclusively storage. I was working on a deal with a bunch of people who were near to storage, and they're like, "Oh, can we hire our multifamily property management company?" And I'm like, "Would you hire a storage one to manage multifamily?" They really need to be someone who knows storage, because when you get to that level of detail, they've got to know the nitty-gritty. You choose from an operating software, and that's true in most asset classes, but there are different companies that provide them. And there's 3 big ones in storage, and then some smaller competitors. Rent collection, again, this depends on the market, but you have to have a way to take checks. It's very rare that you are able to convince 100% of your customers to go to credit card. Now, you can make that a factor of you can't move in if you don't do credit card, but you're going to lose some customers. There's still people who like to pay by checks. We've talked about the eviction process and policies. Now, I talked about that there are state laws, but then you've got to decide how do you want to enforce those? How long do you let people go to not pay? And that's completely up to you. I know some owners, 30 days and they send you to auction. And I know others that will let you go months. And, maybe it depends on your personal situation. The revenue management is much more complicated than multifamily. And that's where you need the offsite property manager who knows self-storage. You do competitive analysis very frequently and change the prices frequently. The services, you can determine if you want to add value. A lot of storage places are offering truck rental, either for a reduced fee or free. Some of them buy a moving truck and hire movers and will actually move your stuff. And some offer cleaning as a service when you leave. A lot of tenants who leave do leave behind a lot of junk. And you can decide if you want to sell retail. Locks are the most popular, but obviously you'd have to have an office open to be able to sell retail.
I do have a question. Is there a standard deposit like multifamily? How do you?
You can do a deposit. It's not very common. And so, right, you don't have that 1 month security deposit to lean on when they move out. And that's why you determine when you want to evict them. How long do you let them go not paying? Because once they don't pay, they don't pay.
So you can sell lots.
What we have is we have a $25 admin fee when they first move in. So it's not quite a deposit, because deposits are more difficult to manage, right? Because then you got to worry about giving them back. So the admin fee takes the place of that. Okay, I've got some industry data, and it's a little dense. I'm not going to spend much time on it, but we can send you the presentation if you want to read more about it. But the basic trends in self-storage this quarter is that occupancy is down year over year, but it is trending back up. As you can see in the upper right, self-storage investor. So people like us investing in self-storage, buying self-storage properties, that is up. Even though interest rates haven't really changed, they're seeing a big uptick in people buying self-storage properties. And part of the reason why is development is down. Self-storage development hit a high, and it has been trending back down, which of course makes existing properties more competitive. In the chart on the top, self-storage rates did take a dip in 2023 and 2024, and they're trending back up now. And the top line is climate controlled. So you asked about the difference in pricing, and you can see it's about $2 per square foot difference in pricing between non-climate controlled. And this is a survey that was done by one of the software companies. And there's just a couple of things I will point out. 37% people were planning a move. Now, what did they actually move with interest rates? Maybe not. But 60% of those people moving said they would use storage as part of the process. That's pretty big. And the last point, 32% prefer in-person interaction. So if you decide to go 100% automated, you're really leaving out a third of your market. This I found interesting. 18% of America has a storage unit. That surprised me, but what surprised me even more, that almost half the people in the survey said they might be renting storage in the future. And the previous year that they'd done the survey, it was 35%. So that's a huge jump. And I think you're seeing there the pressure of not being able to buy a home or buy bigger home. And furniture is still king in storage units. And I know that because people love to leave it behind when they move out. And you might say, well, is storage just for older people who downsize or who saving their antiques? Nope. Millennials are buying houses later, so they're staying in apartments later, and so they don't have as much storage space. So they are increasingly interested in storage units, and we're seeing that in our business too. And that's it. Thank you for listening, and I'd be happy to handle any questions that didn't come up during the presentation.
I got a few.
Okay.
Okay, so at the beginning of your presentation,
Stefan, all I could see is the top of your head. If you want to
my bad. I'm sorry. Is that better, Donna?
Yes.
Okay, so at the beginning of your presentation, you said you did a lot of mentoring and like at the Super Bowl and stuff like that, mentoring. So if you need any mentees for the Super Bowl in the future, please, by all means, let me know, okay?
Those were a little bit two separate topics, but when I worked at AT&T, we did the wireless networks for football stadiums. And I managed the Southeast, which is why I do real estate in the Southeast, because I worked on it for 20 years and I know the demographics in the market really well. But the Southeast had 3 Super Bowls in a row, and that's because LA couldn't get ready on time and had to get bumped up. And so I was managing 3 Super Bowls, not the whole Super Bowl, just the wireless network. It was really high pressure. It was a lot of fun. I didn't get to go to any of them. We don't get to go, but they all went really well. So no, I can't get you a ticket. Sorry. I couldn't even get in. I tried.
All right, but okay, thank you. On a more serious note, what happens, let's say someone has a Renoir or a Vincent van Gogh or a Picasso painting, and you evict them. What do you do with the paintings or the fine art?
In most states, in order to best comply with the state laws, you auction it off. In most states, you open yourself to liability if you just throw it out. It's very strange. Doesn't make sense to me, but I think it gives the person to buy back their stuff. Now, at my property, we give them all the time in the world to buy it back, and nobody has a Renoir. But yeah, it would go to auction most likely. And at my property before I bought it, there was a tenant that had fine art in there, and there was a leak, and it got
Yeah.
ruined. Now the seller didn't want to open an insurance claim, so he just wrote a check to the person, and you can do that too. But we initiated tenant insurance for our tenants. Now they can opt out of it, but that also gives us legal coverage to say, okay, we tried to get you to do insurance and you chose not to, so you're responsible for your stuff. Now we could handle it differently, but legally we're fairly covered. And
Okay,
if
so go ahead. I'm sorry, my bad. Keep going, please.
no, just 30 more seconds. Some homeowners policy will cover a self-storage unit, but you've got to make sure you have that language in your policy, and you have to bring that page to us to show us that you have the homeowners.
Okay, so if they're evicted and you take it to auction, when it's auctioned off, does that money goes back to the tenant?
No. Oh no.
That
You
goes.
don't make much on an auction. We haven't found a Renoir yet. But you have to pay the auction company a fee. So we auctioned off 4 units and we made $150. You're not doing it for the money, you're doing it to reclaim the
Property.
unit so that you
Right.
can rent it out again. Yeah, it's not a moneymaker at all, which is why I liked your idea of storage wars. I got to look into that.
Right. Okay, so if you did find something, could you go to an individual investor and say, I've got this piece of fine art and make me an offer, so to speak? Is that
I'm
um
not I'm not sure. I haven't gotten that far in the laws, but I am. If I find something good, I'm going to come to you. Okay.
please do. No,
You're my
seriously.
first stop.
All right. And then um another question I have is that are you looking to take on investors or you entertaining educating us or both? I mean, we're
I'm educating. I don't have an open storage deal. I have not been able to find one that works since the one I bought last year. Um, and it's the same story as multifamily. The sellers think it's 2020, and with interest rates, the prices don't make sense. So I look, but I can't find anything. And that's why I personally pivoted to industrial flex, which is a light warehouse. So it's similar to self-storage, but your tenants are businesses, because those are easier to underwrite. They have more margin in them. But some sellers are getting desperate. I was working with a broker, and the listing started at 4.4 million, and I said, at that price, the NOI doesn't cover the debt payment, so you're not cash flowing, you're not making any money. And she said, okay, I'm going to go get you better debt. She got better debt and it helped, but it didn't change it significantly. And she said, okay, I'm gonna go talk to the seller. And she came back and she said, well, he's willing to entertain 4 million. I'm like, it still doesn't work. And she came back to me a month later and said, okay, he'll entertain any offer over 3 million.
okay.
So you do have to negotiate with the brokers, and that can help. But this seller bought in 2024. He did a 1031 exchange, so he just wanted to get his money in something, and now he wants to go do something else, and no
Right.
one's buying it because he bought at the height. He let occupancy drop, and it's just not a great property. It's in a good area, but it wasn't a great property, so I passed on it, obviously.
Okay, and I'm serious. I don't know. Hang on one second here. I don't know if you can see this, but see this. I have a few. I got some paintings from pawn shops. Believe it or not, what I just showed you, if you could see, it was a Matisse, and I got a Picasso, and I got a few others. I got a Rembrandt someplace that I haven't put in a frame yet, but I kid you not. So I'm serious. If you come up with some art, please really do call me.
Okay.
If the laws allow, if the
It,
laws allow.
Right.
right.
If the
If
laws
the law is
allow.
allowed. And Don, I got
All
one
right,
question.
Stefan, we have another question. Can you hang on for a
Of
few?
course.
All right, Olu has a question.
Hi, thank you for taking my call. It's with regards to the Van Gogh that Stefan was talking about. If somebody is going to be storing those kind of expensive things in their unit, shouldn't they be required to let you know beforehand? And then shouldn't they be required to take insurance? Because I'm thinking there are all kinds of paintings. It could be one from like the pawn shop or maybe from like uh, Goodwill, for example, and the person stores these paintings there, then they come back later and say, oh, that was a Van Gogh that I had. Now you have to pay me. I'm thinking they should be required to let you know that this is
They
what
should,
they're
they
doing.
should be, but in most states, they are not. And thus why we push the tenant insurance
Okay, great.
so much. I mean, you're right. It is a little dicey, but you take your chances. Bert, I see your comment in the chat about Las Vegas, and Donna was mentioning that Olu, Donna, and I are all GPs on a multifamily in Las Vegas, and that property has stayed full at 100% occupancy because Vegas has so many people moving in. It is a great market. I'm not familiar with storage in Vegas, but I'm not at all surprised that they've got car condos and things like that.
Yeah, they're everywhere. They have like boats, yachts,
Mhm.
I mean
Yeah,
helicopters the further out you get.
yeah.
And so between there and the fanciest ones I saw, like on my way to southern Utah, St. George, going to like Zion's, there's that whole corridor. They're popping up everywhere. These expensive storage units. So people with the boats and more expensive things. So I don't know how, I mean, if they do that back in like Atlanta, and is that something that's common back east, or is this more like in like bigger cities where they have a lot of toys and stuff like that, you know?
Yeah, you see it where money is. So you see it it's all over South Florida.
Okay.
It's not so much in Atlanta just because Atlanta is so populous. Um, but yeah, it's kind of a coastal thing,
I
not
see.
just because it's boats, just because that tends to be where the money is. But yeah, we didn't talk about a lot of HOAs won't let you park boats and recreational vehicles in your home. And so people have to find place for their toys. And so RV and boat parking nationwide has gotten very popular, not necessarily for the McLarens and the yachts and things like that, just regular sized boats and campers because HOAs have become so strict. So RV and boat parking isn't necessarily considered storage, but it's still, you're storing something. It's kind of like a cousin. And
Mm.
yeah, that's seeing a lot of growth. People will pay, when people spend $1 million on an RV, they don't care if they have to spend $200-300 to store it.
Okay, so one last question. So you towards the end of your presentation, you said something about so some of your focus have kind of switched over to light industrial flex space. And me coming into commercial last year, for the first time trying to learn, initially I was going to try to go into wholesale and single family homes. But when I saw the potential to how much more you could make on the commercial side, I was
Mhm.
looking specifically at distress light industrial flex space. So can you say again why you started looking at that and how you feel that that's a lot more profitable than the self storage, your basic self storage?
Yeah, and I want to give my disclaimer. My IRA, my personal money is very heavily invested in multifamily. I believe it as an asset class. I don't enjoy operating it or managing it. I really prefer the asset classes where people don't live there and I don't have to worry about their life and their kids and their pets and is the pool clean. So industrial flex fits in that category. Also, because of my whole career, I worked with businesses, not consumers. I never worked in consumer marketing. So I never developed, I know business to business marketing. I don't know consumer marketing. Light industrial flex, the tenants are small businesses. So I personally feel an affinity there. And I think when you're doing commercial real estate, there's so many things you can do. Find something you like. It doesn't have to be what everybody else is saying is great. A lot of people are running to assisted living, but that you've got to follow a lot of laws. You've got the care factor, you've got the medical factor. It's not something to take lightly. In industrial flex, it's if you've ever heard the phrase, it's called triple net lease. It's a fancy term for what it means is the tenants pay most of the expenses. So industrial flex is very inexpensive to operate. It's also very easy to operate. And it's funny because every week Donna Olu and I are on a call for our multifamily, and we hear stories, this one got arrested, this one was screaming, this happened, the door broke, da 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 da. And there is always something going on. And similar for self-storage. I check our results every day because as people move in every day, I see what they paid every day. There's always something going on, and I like that activity. Now, while I love industrial flex as an asset class, man, is it boring. I mean, nothing happens. We had a gutter leak the other day because I'm a GP on 3 industrial flex, and the gutter leak was like the most exciting thing that had happened that month. So it is boring, but that's good, right? For an investment.
As long as it pays the bills. Boring is beautiful, just as long as it pays the bills.
Right. And industrial flex has long-term leases, usually 2 to 5 years.
Well, that's the reason I chose it last year. So I put that in the chat, and then you said that same exact thing. I'm all for the triple net, the absolute net, because I don't want to have to deal with any maintenance or be a landlord or kick anyone out, in the middle of the night. So I agree with that. Thanks.
That's cool, Bert. Yeah, next time there's an industrial, I think there is an industrial, well, we can't talk about it. Anyway, we'll talk offline.
Thank you, Andrea.
There is one open. But Donna, you guys interviewed John, so maybe you could dig up his video and send it out again.
Yeah, he did a presentation on operations. And I think he actually just put it on his industrial podcast. But okay, so you were talking about technology. So let's talk a little bit about the technology of, so what kind of companies do you use? Are you using anything AI, or is there anything AI based? And also,
no, I mean, our social media we generate with AI, but I know that's not what you're talking about. Search engine optimization and pay-per-click are two the most, that's the advertising that you do in self-storage. But so is there an AI engine behind that somewhere? Certainly, but we don't do it ourselves. And
so it's not like facial recognition to get into your storage unit.
I'm sure there is, but we haven't pursued it. And again, that's kind of what Bert was talking about. It depends on the market you're in and your clientele. Like in Vegas, would that be popular? Absolutely, they'd love it. And maybe LA. But in rural areas, they're not looking for that. And people aren't going to pay the upcharge for the cool factor for storage, right?
Yeah. So in terms of reporting, so you can change the price of a unit every single day. So talk a little bit about that. How do you determine, is it just purely based on the competition or your own metrics? What kind of reporting do you do?
Two big drivers for why you would change the price. Competition is the obvious one, but the other one is vacancy. So I mentioned earlier that we had more vacancy in climate controlled than drive up, which in Florida didn't make sense, except it did make sense because the new competitors all were multi-story and you had to use an elevator to get to your unit. Now think about a landscaper who's either storing a lawnmower or a weed whacker or things like that. They're not going to put that in an elevator. I mean, you can't put a mower in an elevator. So they aren't interested in those multi-level storage facilities. So if you've got bigger equipment, you want it to be drive up. And so those prices can be more competitive. So, but it absolutely depends on your market and what people are storing, just like Bert and Stefan were saying. So it's unique to the property and the market of what you do. Now, we do a competitive analysis every 2 weeks to see where the competitors are. You don't have to do it that often, but we do. We like to stay on top of it.
And are they also changing their prices depending on?
No, as a matter of fact, we kind of started a price war when we put our climate controls on sale. That was kind of fun. But you'd be surprised, REITs, real estate investment trusts, which is publicly traded real estate, as opposed to what those of us on this call offer, which is private. They don't pay as much attention as you would think. It took them a while to catch on. And although they're doing search engine optimization, my property has outperformed them since we started doing it. And it's like, guys, you're REITs. This is what you do. Like, you manage multiple properties, but they don't pay attention, not the way an individual operator is going to. So, but we do like to
it's not their money, that's why.
That's right.
And
That's right.
Point there. So David Simon has a question. David, would you like to ask? Or I can read it here. Do you know?
Yeah, outdoor. I mentioned RV and boat parking, but I didn't talk about truck parking. I am just starting to look at truck parking, which is also called outdoor storage, which is a weird name for it. I know. Because fleet parking is really enticing. Yeah, I think that's going to be a growing asset class. Obviously, it's very land dependent. Those trucks take up a lot of space. So it is growing in the more, I'm not going to say rural areas, but not in a major metro, because land would be way too expensive.
Yeah.
And those contractors are generally more out in the suburbs anyways, right? They're not going to be in a major metro. Not going to be in New York City.
Right. They just need some kind of access to the highway,
right.
Generally.
Right.
Yeah.
And that's true of most asset classes, right? Multifamily, storage, parking, being close to a highway is often a good thing.
So do you know experienced operators in the commercial truck parking lot?
I do not. And it's funny, I've done some research on this, and everybody and their brother has a YouTube podcast, and I've worked with some colleagues who are looking too, and we found one person that does that asset class. We've not been able to find anyone. So maybe we should all get together and become the gurus on it.
Yeah. I saw one on Instagram, I think.
Oh, did you?
Yeah. If I find it, I'll share it with you.
Okay.
All right. So let's just talk a little bit about your property. So you have some climate controlled, some not climate controlled. Is there anything else on there, like parking for RV?
Yeah, we've got 19 parking spaces, and we're adding 2 more. And because we're in Vero Beach, what most of our parking goes to are marine businesses that fix boats, and they need a place for the trailers while they're fixing their customers' boats, right? A very specific scenario that you wouldn't have thought of, but that's what's most popular for us. We do get a couple of RVs, but some people have built covered RV parking way further out. I mean, 10 miles away from my unit. So if you have an expensive RV, again, right, RVs can be $2-3 million. They probably aren't in Vero Beach. Let's say they're 500,000. If you bought something for 500,000, you're going to pay a little more to keep it out of the Florida sun. So very, very, very specific, but we still do get a lot of boats in our parking because marinas are expensive.
So how do you distinguish pricing between boat parking, low parking, or, not climate controlled, climate controlled? So is it again just competition and vacancy, or are there other strategies?
Yeah, no, it's the same thing. Now for the boat parking, you have a different set of competitors, so it's a little harder to do the research, but you can find it.
Oh, okay. All right. Stefan, did you have more questions? You're on mute. Oh.
All right, there. It wasn't related. It was. I saw David Simon. Is that our cousin?
No.
Okay.
Different one. All right. So in your particular storage unit, you say you have a mix of small businesses and just, people who move with their furniture. I know when Ken's mother moved, she had a storage unit. A friend of mine recently bought a storage unit. Like, what is the average length of time you think somebody might stay in a storage unit?
That's a great question. Nationwide, it's about 17, 18 months. So it's longer than you would think. And that's why I say moving isn't the only driver of it, because people who move usually only keep it for 3 to 6 months, if even that long. You get some people with renovation who are doing renovations in their home. And so they got to move out the furniture if they're doing flooring or whatever, or if it's a big renovation. So you get those two. Again, I don't go after those temporary movers. I want the people who are going to stay. But in our property, the average length of stay is 2.5 years.
Oh, wow. So how do you distinguish between someone who's going to stay and someone who's,
Well, you can't, right? I mean, you never know what's going to go on in their personal life. But in our advertising, we don't target movers and renovators. We target people who've had babies, which is a big driver. And we target people in apartments. And for the parking, we've been targeting marine businesses, whether they're selling boats or repairing boats, because that's where the boat owners are.
So you've had to learn a lot about advertising to sustain this business, it seems.
Yeah, well, you hire a professional, but yeah.
Oh, okay.
Yeah. And I do a lot of research, and there's studies on what are the 10 biggest drivers. And so we take those and rotate them through our advertising. But every time we do one about babies, it's the most opened one. So I go back to that a good bit. We've been advertising parking a good bit lately. So that's been a new theme in our advertising. That's been fun.
So Kenny is renovating our bedroom. So instead of using
Probably
a
should have
storage
put it in
unit,
storage.
we're using our living room and our daughter's bedrooms. It's just a disaster. Probably should have used the storage unit again. Didn't think about it. Okay, so what else? Who else has questions?
I have a question. So what's your main mode of marketing to people now that it's like, the internet world here? I mean,
yeah, it really is Google search as much. I can't stand Google, but that is the bulk of where you get your new customers. Now, we still get a lot of walk-ins. We're on a busy street near the Vero Beach Airport. So walk-in is a big driver for us. Our website is the second biggest driver, but you got to figure they did a search to get to the website, right?
Gotcha,
They didn't just, Aero Self Storage didn't just come to them in a dream for them to type in. So, we're in a tertiary market. Someone was asking about saturation. Texas has the most saturated markets. Houston, Dallas, that whole area is the most saturated in the country. Atlanta is second, Metro Atlanta. So the investments, meaning private companies buying self-storage, is really going on in the secondary and tertiary markets. And in those markets, people are less technology savvy. Right. They pay cash and check. So it's a different operation than in a big city.
Okay.
Makes sense. Yeah, it's really evident that you know your market and you know this asset class. So what surprised you most about this asset class?
The dirtiness. Every time I go to my property, I'm so dirty.
You're wearing gloves.
I won't touch anything. That's why we had the hallways cleaned, because a woman complained. She said, I'm just not comfortable. This doesn't look good to me. And I was like, I knew it. There's other people like me clean those damn hallways, because I thought it was too dirty. I should have gone with my gut. So yeah, I wasn't expecting that. And the delinquency still surprises me. to this day, how people just leave their stuff.
Bert had a drop, but he said thank you so much.
Yeah, thank you, Bert. Yeah.
Yeah. So when you have a clean out or an auction come in, do you leave the stuff there? Do you have to move it out? Or is it
Well,
like storage drawers?
you notify the customer it's gone to auction, you do the newspaper thing. But then once it's auctioned, the auction company takes it away. And we don't really have to do it. Essentially, they clean it out for you. So, I get paid for someone else to clean out the unit.
Okay.
Okay.
So is there like a standard, what's on the floor? Is it dirt or is it a cement slab or?
Oh, it's cement.
Concrete
Yeah,
slab.
you gotta have a slab. Yeah.
Okay, so then it just might be a matter of sweeping out.
Yeah.
Yeah.
Yeah. It's cement slab and then the metal walls that you tip and metal roof that you see, unless it's one of the new Cube Smart fancy ones. I mean, they have
Okay.
glass walls and it's made to look like an apartment building. I mean, they're really beautiful.
Sure, there's lots of bugs in those things too, from sitting
Yeah.
and for years,
So,
Oh
and
God.
spiders and
we had
ants.
a little bit of a rat problem.
Yeah.
And that's not because we kept the facility dirty. It's because people store food.
Yeah. Gosh.
To Olu's point, we say you can't store food, you can't store gasoline, you can't say these things, but we can't watch everyone move in. I mean, we physically could, but we legally can't. And we can't inspect their units. So, that is a risk. That is an absolute risk
Oh.
of the
Okay.
business. But you can
So
generally
there's-
find where the rats are going and the units that have food. So you call the customer and, hope they take care of it.
Yeah. We have raccoons in our rental, pain in the behind. Kenny deals with them mostly.
Yeah, we had mice and squirrels in our single family rental.
So there's another question from David. What, in your experience, management, investment in RV, mobile home parks, what is your experience?
Yes. So I don't have mobile home parks is not something I'm targeting because people live there. And I know it feels like I'm splitting a hair there. I like RV parking because that's where people just leave it and go. Mobile home parks, they live there, and I don't want to get gross, but there's a component of RVs that I just don't ever want to deal with. So I haven't pursued that asset class. Sorry.
Interesting perspective, but I totally understand. Okay.
Until you're an operator, you don't realize the things you need to deal with on a day-to-day business.
Yeah.
And some of them are dirty and gross. And some of them are unpleasant, right? You have people die.
Yeah. You have people attacking your property manager with balloons.
Yeah.
Ridiculous. Thank you, makes sense, being therapist. All right, so what else? Let's see, we're talking about the drivers for how do you find triple net properties that are being rented and owners want to sell?
So the first half of that question is the same as any other asset class. There on Crexy, you sign up with brokers. I mean, I get a ton of properties emailed to me, and I don't know where I got them from. I don't know these brokers. I don't know how I ended up on these lists. It's just once you start going to this website and that one, I guess that you get on a list. So getting the listings is fairly easy. You bring up a great question of, do the owners want to sell? And a partner of mine doesn't like off-market properties because he knows brokers that will go to someone and say, hey, you want to sell your property? And they say, well, okay, if for the right price, I will. That's not a motivated seller. And so now you've got, even if whether it's on market or off market, you've got a seller that's not really motivated, a broker that's pushing it. And, that's just not going to be a good deal. So identifying, does the owner want to sell? That requires a good bit more discussion with the broker. And hopefully you get an honest broker who will tell you the story. But, when you're looking at property, one of the first questions you ask is, why are they selling? And sometimes you get the true story and sometimes you don't. You never get the full story, but always good to ask.
So there is another question. What is the best asset class business to have as triple net investment property?
I am not an expert on that, but from what I've read, medical office buildings are big because doctors don't like to move because patients don't want to go find them. Now, I'm speaking at a very high level here. Just again, from what I've read, and that's not a ton on that, but I am curious, triple net on medical office building does intrigue me. But something people don't think about triple net, or businesses with land leases, which is another term for it, is most hotels are on a land lease. Most fast food are. And I don't know if any of you know Publix grocery store. They're mostly in the Southeast. So if you're in the Northeast, you might not know them. But they're a grocery store, but their business is a REIT. They will go buy they'll buy land. They'll build an outdoor shopping center. The Publix grocery store will be the center tenant, and they'll rent out all the other stores, and they make way more money on their real estate than they do on their groceries, even though they charge high prices. So you can really do anything as triple net. Just make sure you do your research that the tenant is stable. So like, would I want a dry cleaner as a triple net? No. A surgeon? Sure.
Yeah. Andrea, speaking of land lease, could you explain what that is? Some people might not know, and how does that impact your property?
So that is when you own the land and you rent it to someone, and they build the business and they pay you rent for the land. So they don't own the land that's under their property, which is sort of like a condo, right? Or even some townhomes. You may own a little bit of it, but you don't own any of the common areas. Similar concept. A lot of businesses operate that way. Even airports do. A lot of industrial does. You just never know. Hotels are the biggest and the most notorious for it, and that's sometimes why you see transition in hotels. But it's just, there's so much. I said at the beginning, there's so much to real estate. So find what you like. Land lease is yet a whole nother category, and it is triple net, but it's a specific one of triple net. And I don't mean to get too technical. It's just there's so much you can learn when you start doing some research.
So that's one thing that I was amazed about when I was reading. There's 3 volumes of Real Women in Real Estate, and it's like every single woman came from a different perspective. It's like really quite interesting. But your Vero Beach property has some kind of, it's a land lease. Was it 99 years?
We are on a land lease, and that has proven very valuable because we did something called cost segregation. Now, I know I'm getting really technical here, but that's when.
Just to that point, next month we're having a cost segregation specialist.
Okay, so you'll learn more next month, but at a high level, you have an engineering firm come look at your property, and they determine the value of all of the components, the buildings, the HVACs, everything. When you are on land, part of the value is the land, and you can't take depreciation on land. So you lose your ability to take depreciation. Depreciation is a tax savings. Being on a land lease, 100% of our property could be depreciated. So we're able to give a lot more depreciation, tax savings, I'm oversimplifying it, to our investors, and also on the tax return for the business. So I had one investor that said, I don't like your deal because it's on a land lease. And little did she know, she would have saved a lot more on her taxes. But you live and learn.
In regards to the land lease, after the 10 years, can they boot you off and then you got to go somewhere else?
So that was a concern of that particular investor. We are in a 50-year lease. We're in year 47. We have 47 years left. We're in year 3. But here's the more important part. We lease it from the Vero Beach Airport. Okay. Part of the revenue for the city of Vero Beach are these leases they have around the airport. And they have them in front of the airport, not behind the airport. And we're right on the road. So we're as far away from the airport as you can be. Because someone said, aren't you worried they're going to take your land back to build parking or something? And I could give you 12 reasons why they won't, but that was something we researched very thoroughly and spent a lot of time with the city of Vero Beach. They make a good bit of money on those leases. The city would have to replace all that revenue if they got rid of the leases. And why would they do that? They've got 2,300 acres behind the airport to expand. So why would they come take my storage property?
Gotcha. Okay.
Yeah, that's a very interesting point about the cost segregation. Didn't even think about that with a triple net lease. We have a repeat question about finding triple net, but and related syndication. So I don't know if you're interested in answering that a second time, if you don't mind.
Yeah, it's still the same. And but what I'll add is there are brokers who specialize in this, so you just have to do a search for brokers. Although if this is something you're interested in, Donna and I can connect you to John Sadati, who knows a lot of brokers who do this. I don't have any of the names off the top of my head, but we can get some contacts. And I'm not saying just go search, because I know that's not a helpful answer, but you can. You can search on Crexi and LoopNet for these listings. But you're going to find more from knowing a broker that does this, that specializes in it. And I'm sorry, David, I have not researched overnight truck parking where they stay in their cab.
Along the highway. Some of them.
Yeah, which is a little scary.
Yeah.
For them.
So when people are having babies, what are they clearing out a room and that's why they're using storage?
That, and also when they're in between babies, they don't give away all the stuff because they don't want to have to buy it again. So they store like a crib. Think about storing a crib, right? Yeah. Once the baby's out of the crib and into a bed, the crib takes up a lot of space, right? So not the clothes necessarily, but it's more of the furniture, which goes back to furniture is the number one thing in storage. But I think it's also getting rid of the things you don't use daily to make room for the things of the baby. Yeah.
Mm.